Hi guys, good evening. So today we'll be talking about support and resistance, right? So today we're talking about support and resistance. That's what we're talking about today. So this is let me just check the YouTube channel. So let's see. This should be part 13. This should be part 13 of the class. And today we're talking about support and resistance. That's what we'll be talking about today, right? So we're talking about support and resistance. So now support and resistance can be called key levels. So are key levels are divided into two. We have one. So let me just write that down. So key levels are divided into two, right? Key levels. So these key levels are divided into two. One is called the support. Right, so the first one is called the support level, while the second one is called the resistance level. All right, these are the two key levels that we have. The first one being the support level, while the second one being the resistance level. All right, so these are the two key levels. So in case you hear of key levels, right? In case you hear of key levels, just know that key levels are divided into two: the support level and then the resistance level. And one thing you should know that these key levels are levels or so let me explain what key levels are, then I'll explain what is support and then also explain what is resistance. Right. But first of all, what is key level or what are key levels? Now, key levels are strong points or areas, are strong points or areas in price which can cause possible reversals. So let me just write that down. Okay. These are two types, right? Key levels. So we have two types of key levels, which is the support level and then the resistance level. So what are key levels now? Right? So key levels. So key levels are strong areas. They can be strong and they might not really be strong. So, but I'll use the word strong here. So they are strong points, right? So points or areas. Um, Key levels are strong points or areas in price which so in price in price which can possibly cause reversals markets. So this is what key level is. So key levels are strong points or areas. So this they are areas or they are points in which price can possibly cause reversals in the market. This is what key levels are. So let me just put this up here. So this is what key levels are. And key levels are divided into two, which is the support level and then the resistance level, right? So key levels are strong points or areas in price which can possibly cause reversal in the market. And we have two types of key levels: the support level and then the resistance level. Now, what is support level? Well, in this video, I'm going to be showing you how to draw your support and resistance level. But first of all, let me explain what is support level and what is resistance level. Then I'm going to show you how you can draw your support and resistance level. So as I said, key levels are areas or points in price which can possibly cause reversals in the market. And you say well, it's divided into two. It means that this support and resistance level are areas or they are points where that will cause reversal, right? Because that's what key levels are. So if it's divided into two, that means the both support and resistance level will also be reversal points, right, in the market. So let's start with support level. Now, support level, as I said, this is areas or points that can possibly cause reversal, mostly to the upside. So it's now let's say this is price, right? Right, this is price coming down here, right? With this is of higher highs and higher low, and then this happened, something like this, right? Something like this, and then still comes back down here and goes back up. So you can see something like this. Now, this point here, right? So let me use this point here is your support level because price came back to this point multiple times, right? Price came back to this point multiple times. So your support, this is called your support level, right? So these are your support level. I'm going to show you how it's going to look like on chart as well. So these are areas that can possibly cause reversal because when you see what is going on in the market, whenever price comes down here, right? Whenever price comes down here, it went back up, comes back down here, went back up, right? So you can see there comes back down, went back up. So like I can see this at this point, there's a lot of rejection because the price have touched this support level multiple times. So there's rejection. So it's telling you that there's reversal because whenever price comes down here, it rejects it back to the top. Whenever price comes down here, it gets back to the top. Whenever price comes down here, it gets to the top. So this is what we call a support level, right? So it's a point or areas that can possibly cause a reversal in the market. And I just show you this is where your support is going to be. So mostly your support usually used to be down and your resistance usually used to be up. So now let's draw our resistance level here. Right, so let's draw our resistance level here. And now this is, so these are resistance level, right? Now, whenever price comes here, it always rejects back down. Price comes here, rejects back down. Price comes here, reject back. So there's multiple rejections here, which can possibly cause reversal or which is causing reversal. So this is a resistance level, right? This is our support level, right? Where you can enter for a buy. While this is our resistance level where you can enter for a sell. So whenever you're trading a resistance level, you should be looking for to sell, right? But you don't just sell because it's a resistance level. You have to have other confirmations. Why for a support level, you should be looking for a buy, right? You should be looking for a buy. So this is your support level and this is your resistance level. I hope this is clear. So I'm going to be showing you how you can draw these levels on your chart, right? I'm going to show you how you can draw this level correctly. Now, what you should know that support and resistance or key levels are one of the most important things you must master when trading, right? Support and resistance or key levels, as I said, where if you hear key level, just have it in mind that they're talking about support and resistance. So if you hear support and resistance, it's telling you that there are key levels, right? So support and resistance or key levels are one of the most important thing that you must master when trading. I don't know if I should really write that down, right? It's just simple English. I don't need to write it down. So you should understand what I mean. Right? You should understand what I mean. So I said support and resistance or key level are one of the most important things you must master when trading. Now, the question is, why is it so important? Right? That is the question. Why is it so? I don't know if I should write that because I'm trying to so that we can catch up very fast as possible, right? Trying to see if we can catch up very fast and possible. So let me just write what I just, the English I was just speaking earlier on. Right? So let me just write that. No, it's not necessary, but I think I should simply just put that down in the market, right? I should just put that down in the market. All right, so supports and resistance or key levels are one of the most important thing things or thing you must master when trading. Right, so support and resistance or key levels are one of the most important thing you must master when it comes to trading, right? So you have to just master what support and resistance is. Now, the question is, why is it so important, right? Why are key levels important? Why is support and resistance important? Now, what you should know that it is important because it can give you high win rate opportunities. This is just the only reason why key levels are very important, right? It can give you high win rate opportunities, right? So support and resistance or key level are the most important thing you must master in trading. Now, the question is, why is it so important? Now, it is important because it can give you high win rate opportunity. Now, I'm going to be writing some secrets or secret tools in drawing your support and resistance, right? I think I'm going to give 3 rules here. right? Three rules of how to draw or mark out your support and resistance, right? So let me write that down here. So let me write that down here. Let's see if I can pick this. So three rules, right? Three rules. Oh, I call them secrets. Three secrets. Sorry. Three secrets rules to drawing your support and resist. Sorry, no dollar sign and resistance. Right. So you only need three secret rules here, which I'm going to write that down here. Just three. Don't need anything more than these three secret rules. So the first rule, right? The first secret rule is going to be multiple rejections. That will be the first secret rule, multiple rejection. Now the second secret rule is that price needs to move away significantly from the swing low or swing high. I'm going to explain what swing low and swing high is. So for example, this point here, this level, right, this support level, this is our swing low, because when price came to this point, gave this, normally you can see when price is coming here, there's a way it's moving, right? It's not really moving significantly, just the way this one is moving, right? So you can see it here. The way, okay. Now, if you look at price was coming down like this, right? Came at this, created the resistance level here because price could not keep on going down, right? And there's multiple rejection here because whenever price comes here, it went back up. Whenever price come here, it shoot back up. So, but now at this point, there's way you can see at here, there's way it's moving, getting like somehow or in an uptrend way. But when it came here, it didn't, right? When this price went up here. When it came down here, it did not do something like this again, right? It did not do something like this before going up, right? We didn't see something like this. So, but what it did that it just gave this sharp move like this. So here will now be your swing low, right? Here will be your swing low because this was the point that caused this sharp move. Because as I said, in the second secret rule of drawing your support and resistance, I said price needs to move away significantly from the swing low or swing high, right? Price needs to move. So let me write that down here. Price needs to move significantly from the swing low or swing high or swing low, right? So the first rule is multiple rejection, while the second rule is that price needs to move away significantly from the swing low or swing high. So price needs to move away significantly from the swing low or swing high, right? So I explain what swing low is. So you can see this sharp move. It's different from how it moved from here when it came to tap this support level. The way it moved is different from how it moved here. So here will be your swing low, right, which is your support level. While for here, the same thing. You can see when price came here, it came back down, went up before it came back here. But when it came back to this resistance level, it didn't just create something like this, right? It didn't create something like this, maybe going up before, like coming to tap your resistance level and then going up. But what it did, it just gave this sharp move. So here, which is your resistance level, is now your swing high. I hope this is clear. So the third secret to here is that a level can be both support and resistance, which is third secret to, right? So the third secret to is that a level can be both support and resistance, right? So a level can be both support and resistance. So these are my three secrets of drawing your support and resistance. One, there have to be multiple rejections, which is here. You can see there's a rejection. The reason why we draw here as our support level is because there are rejection in the market. There is rejection at this point. Whenever price comes here, it went back. Whenever price comes, it's rejecting it, pushing it up, comes back here and pushing it up. So this is our support level, right? And because there are multiple rejections, so you can see this first secret tool is valid for us to mark here as our support level. And I said price needs to move away significantly from the swing low or swing high, which price also did here, right? With this one, price also did it here. And then the third one, a level can be both support and resistance. Now, a level can be both support and resistance. It means that support can become resistance and resistance can become support. I actually explained this yesterday, but because this is particularly for support and resistance, so I'm going to really talk about it very well. And let's see how fast we can cover because of the time, because we just have less than 40 minutes. So support can become resistance, while resistance and become support. I actually explained this, but I'm still going to talk about it, right? So support can become resistance, and while resistance can become support. Now, okay, let me add another secret tool here. So it will be 4 instead of 3, right? So let's have 4 secret tool here, right? So let's have 4 secret tool. Now, the fourth secret tool is that the level must be near to the current price, right? The level, so the level must be near the current price, right? So I'm going to still show how all this is going to be on the chart, but I just want you to have the idea now, right? So I want to put this point, I want to put this right down here because this is for this. So the first secret we have here is number one, multiple rejections. The second one is price needs to move away from significantly from the swing high or swing low, that's support and resistance. The third one is that a level can be support or resistance, where I talk about support can become resistance, while resistance can become support. And then the third secret tool, the fourth secret tool is that the level must be near to the current price. I'm going to show this on the chart, right? I'm going to show this on the chart. So now that you have learned how to draw your support and resistance, the question next is how do you trade them, right? This is the question. How do you trade this support and resistance, right? How do you trade the support? So now let's see a real life example of this support and resistance. So I'm going to really push all of this down. Just push this down. So now I've marked out my support and resistance here, but I'm still going to just try and do that again. So let's see. Yeah. So now you don't just though I'm because I'm much good. So that's why you can see where I draw this my support, my resistance level. But as I say, it's a point or area. If you check the definition of what I call key level, this or I say there are points or area that can possibly cause reversal in the market, right? So now this is so let me just zoom this out like this. And let me just delete this, like put as resistance and delete this now as well. So now I've just mapped out, no, sorry, this cannot see. Let me just put that down here. So you can see now so let me just mark out my resistance level. So this is my resistance level here, right? So this is my resistance level, and this will be my support level, right? This will be my support level. Right, this will be my support level. So this is my resistance level and this is my support level, right? So you won't just, right, you won't just come and be doing like maybe you're drawing just a single line. You can actually do it when you're good at trading support and resistance, right? You can be good at it, so you just don't need to be drawing your chart like this. But as I said, key levels are areas or points or areas where price can possibly cause reversal, right? So I can either put this here because if you see when price came here, it's reject back down, came here, reject back down, went here, reject back down, right? Or simply I'll just use this my rectangle tool, right? And just put it here because all here like this, right? All these areas here is our resistance level, while this area is down here is our support level, because whenever price comes back here, rejects back up, come here, rejects back up. So you can see just bouncing between support and resistance. Right, so I've marked out my support, I've marked out my resistance, because whenever price gets to, now you can see at this resistance level, whenever price gets there, it always rejects, it always gets rejected and head back down. So this is telling you that this point, or this is a strong resistance area, right? This is telling you that this is a strong resistance area, because whenever price comes here, it rejects back down. Price comes here, reject back down. Price comes here, reject back. So this is telling that this is a very strong resistance level, right? This is a very strong resistance level. So same thing here. So if you look at this, is a very strong support level, because whenever price comes back down, it gets ejected back to the top. Comes back down, gets ejected. Comes back down, gets rejected. So you can see this is this is our support and resistance, right? This is our support and resistance. So now, the first thing you want to look at, like you want to look out for, right, at key levels, is to see what price is currently doing, right? What is price doing at this key level? Because when you want to trade them, you don't just enter the trade just because it's on the support level or a resistance level. I've told you that whenever you're trading either candlestick or chart pattern, you always want to have multiple confirmation. Now, this is where you can start seeing multiple confirmation for you to enter for a trade, right? This way, you're going to start seeing multiple confirmation now to enter for a trade. So the first thing you need to look out for, or the first thing you want to look out for at key levels, is to see what price is doing. What is price doing at this key level? Is it in a support level or a resistance level? What is price doing? What is price doing at this level, right? What is price doing at this level? So is price, now this is what you start seeing, or what you start telling yourself, is price going to break past this level, or is it going to reverse and head back down, right? So now you can see at this point here, when price comes in here, right, went back up, right? So now what you are going to tell yourself, is this price going to break past this? So let me just use this. So now what you're telling yourself is that since price came going back up, now is it going to break past here and continue going up, or is it going to reverse or be rejected and head back down, right? Same thing here. So if it comes to the resistance level, now that's why you need to look out for what is price currently doing at these levels, right? What is price currently doing at this level? This way, is price going to continue going up, that is going to break past here and continue going up, or is going to get rejected and head back down, right? So this is what you need to um tell yourself, right? This is what you need to tell yourself. So now, one thing you should look at how to trade support and resistance, right? So you can see at this point, when price came here, right, price got rejected back, went back to this resistance level. So what you can really do here is, when price gets to this resistance level, right, because you can see when price gets to this resistance level, if you look at the left hand side, you can see price came to this point multiple times, right? So the next time price is going to come back here, right, what you need to do is to wait, right? Even if price is at this point, do not enter for the trade. Whether you're looking for a buy or for a sell, do not enter the trade. Wait for it to reach your key level, either your support level or your resistance level. Now, you can see that price came back to our resistance level, right? So when price came back to our resistance level, now this is where you need to start combining all what I've taught you: chart patterns, candlestick pattern, rejection pattern, all of that. So now, if you look at, we have a rejection pattern here, right? You can watch my previous video on candlestick pattern, right? Or candlesticks. You are going to see you are going to know which candlestick rejection pattern is this. There are other ones also that I didn't treat, right, in the video. There are other ones I didn't treat. I know I talked about um dragonfly. Okay, those ones are doji. I talked about, so let me see if I can really just quickly, I don't know, let me see if I can just quickly look for where I talked about all those candlesticks. Let's see how fast we can, right, we can just discuss them, because I do want to be very, very quick and fast as possible in this video, right? I want to just see. So let's see if we can go back and see if we can get the candlesticks. Okay, I don't think it's here. All right, let me see how fast we can get those candlesticks. But it's very, very useful to explain it in this video since that's really what we are talking about. So possibly maybe they are no longer here. It's possibly they are not here. It's maybe that um I guess we don't have them here again, right? So you can just watch my videos, and you're going to see where I talk about candlesticks. Though there are some that I didn't list, as I said, there are some that I didn't really mention those candlesticks. Most of them, I won't say they are not important, but you can't just learn every single candlestick that is out there, right? So okay, I think it should be this one. So let's see. I think this is where I talked about candlesticks. So chart patterns. These are chart patterns here. These are chart patterns. These are chart patterns. So let's see if we don't have the candlesticks again. Don't think we have candlesticks again. So I guess we don't have candlesticks again. So I'll just continue. Um, so just continue from. I can't really find that. Thought I could see it so that we easy to just explain that place and then just continue moving ahead. But since we didn't see it, I think I deleted it, right? Deleted it. So since we didn't see it, I'm just going to go back as usual and continue from where we stopped, right? So I'm just going to go back as usual and continue from where we stopped. So I was talking about candlesticks. So let me just talk about like about two candlesticks here. Right? Let's talk about two candlesticks here. And then I'm not sure I talk about these candlesticks on that's I didn't talk about these candlesticks on our last previous class on candlesticks, but it still relates with this one. Right? It still relates with this one where we have so you can call this either pin bar or shooting star, right? Or hammer. I call it hammer. I don't know if I talked about hammer there or shooting star, right? I talked about morning star, evening star. I talked about Gucci, Gravestone, Dragonfly. Um, I talked about I think I talked about two more candlesticks, but I can't remember. Right, I can't remember, but I talked about two more candlesticks again, aside from Gravestone, Goji, aside from um. So let me just see if I can really check that out very quick. Right, let me see if I can just check that out very very quick and see. So see that's candlestick I said we talked about. So let me just okay. I also talked about engulfing candlesticks. Right, I talked about engulfing candles. I remember that one very well. Right, I talked about engulfing candle. So let me see. So I talked about did I talk about hammer? I'm not sure if I did. I know I talked about Morning Star, Evening Star, Gravestone Doji, Dragonfly Doji. Yeah, I talked about this too. Remember, I talked about this too. So there are also other candlesticks. So let me just talk about them very, very quick. They are very, very quick, and then we also move to the next this thing move to we'll continue from our class. So we have something called the shooting star, and then we have something called the hammer. Now, these two candlesticks can be called pin bar. So let me just talk about this very, very quick. Right. So let me just talk about this quick, very, very, very quick. So I hope you can see my screen, right? I hope I'm sharing okay. So, so let me just talk about this very, very quick. So I'm going to talk about two candlesticks here, just two, very quick. Two other candlesticks because I didn't talk about them last video. So we have what we call the hammer, right? And then the second one we have what we call the shooting star. Very quick, shooting star, right? So please, I'll talk about it very fast. And what did you do to understand it, right? Shooting star. Now, so this hammer is a bullish reversal candlestick pattern that happens at the bottom of a downtrend, right? So if price is coming down like this, right? So if price is coming down like this, and then this hammer candlestick forms right, at the bottom of a downtrend, it signifies that a bullish reversal is about to happen in the market. So it's just opposite of shooting star. Please, you can watch this, like you can watch this later on because I don't have much time. Why for shooting star? It happens at the top of an uptrend, right? It's a bearish reversal pattern. So you can see it like this, and then it happens at the top of an uptrend. The fact that a reversal is about to happen. Right? It's just they are almost the same thing. And you can call this pin bar. Right? You can call these two candlestick patterns. You can call them pin bar. Right? You can call them pin bar. I hope this is not paused. Right? I hope. Guys, can you hear me? I hope.
I can hear you. I can hear you.
Can you hear me?
I can hear you.
Okay, but can you see my screen?
I can hear you.
Can you see my screen? Can you see my screen?
Yes, I'm seeing it. Though
Okay.
there was a time it went off.
Okay, okay. So these are the other two candlesticks, but you can call these two candlesticks, you can call them pin bar. So in case you hear me say pin bar, right, I'm referring to either a hammer or a shooting star, right? So now, if we look at what really happened here, right? What really happened here based on this candlestick that we just talked about now. You can also take this as a somehow more like a doji, a dragonfly doji and a gravestone doji, right? You can also look at it in that way. But these are other two candlesticks that I didn't talk about as well. The hammer and shooting star. The hammer happens occur at the bottom of a downtrend, while the shooting star occur at the top of an uptrend. So, and this is how the shooting star looks like, right? This candlestick here. So let me just draw that. This particular candlestick here, right? This one here, this is how the shooting star looks like. While the opposite is just for the opposite of this shooting star is the hammer. So you see this week, instead of it being up here, it will be down, right? It will be down. And it might be, you can see it's either blue, either red candlestick or blue candlestick. It doesn't really matter. But when it's in bottom of a downtrend and it's a red candle, or you see a green candle, as long as it gives you this pin bar, which is this weak rejection at the bottom, it's telling you that it's a hammer. While if it gives you at the top, it's telling you that it's a shooting star. So you can just relate this with the gravestone and dragonfly doji, you understand? So here we have this shooting star, right, at this resistance level, because you can see price came here, rejected, came back down, rejected. So the next time price came here, it gave so now this is how we trade it. Now you give us this rejection candlestick here, which is our pin bar or shooting star. Now the next, which now we have two confirmation. The first confirmation is that price at this key level, which is our support level. Now this is how we trade candlestick. Now the first thing you should know that price is at our key level, right? So this is our key level, this is our support key level. Now, the second confirmation is that price gave us this shooting star, which indicates that a reversal is about to happen in the market. Now, the third confirmation you can see here is the moving average crossover. Now, I didn't talk about this moving average because mostly we don't really use it. Like, I don't really use it that much, but you can see it on my chart, but I don't really use it. But to explain it here, now, let me just talk very quick also on moving average. Now, moving average crossover or moving average is this line there. See this line that is looking, you can see this blue line here. Like this is my moving average. So whenever you see the moving average crosses below the candlesticks, it's telling you that it will be going up. If it crosses above the candlestick, it's telling you that the market or the price will be going down. Now, take an example here, right? So you can see at this point, the moving average was above the candlesticks. So you can see the moving average was above the candlesticks here, right? You can see above the candlestick. And then at this point, this is where the moving average crosses over, right? You can see the moving average crosses over. Now it's now below the candlesticks, meaning that it's telling you that it's a buy, right? The market will be going up. Why? If it's selling, which is here, you can see it crossed over, meaning that it's telling you that price will start selling, right? So this is what, and you need to trade it only at key levels, right? You need to trade it at key levels, either support level or resistance level. So the confirmation we had there is that price came here, tapped this our resistance level multiple times, which is why we mark it as our resistance level. Now, the next time price came here, what we are now thinking is that, is the price going to go up or is it going to go down, right? So when it came and tapped into our resistance level, what you need to do is to wait. Look at what is price currently doing at this level, right? What is price currently doing? What is it telling you? What is it forming, right? So now the first thing we saw that, okay, price at this key level, which is one confirmation. Second confirmation is that price gave us this rejection bar, right, which is our shooting star. This is two confirmation. And then the third confirmation, this is the moving average. You can see it's crossing above the candlestick, which is telling you that we will have three confirmation. This is saying that the market is going to sell. So what you can simply do is to enter the trade. The moment you see the moving average cross over, right, enter for a sell, put your stop loss above here. Just give it some little bit. Guys, now you don't need to, you should not be putting your stop loss very, very small like this, because there's high possibility that price will go up to test this level before going back down. So it can hit your stop loss and start going in your way. So what you need to do is that for you to put it above here, at least you have a little bit of breathing space or breathing room, right? And you put your take profits in the next resistance level, also in the next support level, right? So you can see price literally came back down here. So you can see price literally came back down here and smash your take profits. You would have just made a whole lot of money here, right? A whole lot of money. So you can see this is how we trade. This is how we trade support and resistance. So you can see I didn't just enter the trade immediately. I noticed that, okay, this price has come back to my support level. No, I waited for the price to give me my confirmation, and it gave us three confirmation. One is that price at key level. Second confirmation is that price gave us this rejection bar, which is our shooting star, and then the third one, we saw this moving average crossover, and then we enter for a sell immediately after it's crossover, right? You can see immediately it's crossover, we enter for a sell, our stop loss above here to give it some breathing space, and then our take profits, we put it at the next key level, right? And you can see price came back here and smashed it, and we just made a whole lot of money here. So the next example again I'm going to give is based on support level. Now, when you look at what is happening on this key level here, right? If you look at what is happening on this key level, right? So let me use this. Now let me just read this. So now this is our support level, because if you can see, markets came here, tap here multiple times, right? Market came here, tap here. So this is our valid key level, right? You can see price came back here, went back, came back down, went back here. But now when you zoom out, you're going to see something like a head and shoulder pattern form, right? You're going to see more like a head and shoulder pattern form. I also talked about head and shoulder my video, so you should understand what I mean by inverse head and shoulder and head and shoulder. So you can see this is our left shoulder, right? Price came here, gave us this is our head, this is our right shoulder, right? And this is where market break this neckline. I have explained this, and then it test. Now you can see this is at key level, right? Yeah, I know that you might say, okay, well, I did not enter for the trade, maybe because it's not close to the key level. As long as it's close to the key level and it gives you a chart pattern, you can enter for the trade. Right now, if you say you don't want to trade this, maybe you did not see this or you recognize this inverse head and shoulder, what you can simply do is to wait and see that. You should wait and see that. Now you can see that at this key level, price gave us this engulfing, fat bullish engulfing candle here. So this is another confirmation again. This is another. So this is our key level again, right? This is our key level. Now notice what price did. Price is at our key level, right? This is one confirmation. Second confirmation, we had this bullish and fat bullish engulfing candle here. You can see it engulfed the whole of this candle. to engulf this one, this one. So this is a lucky level. Then the second confirmation is that the moving average crossover. You can see this is the moving average crossover. So what you can simply do is enter for a buy, right? So put your stop loss above and below here, give it some breathing space, or rather you can even put it, right? You can even put your stop loss, like as you put your stop loss right around this place, give it some breathing space, and then put your take profit in the next resistance level. So you can see price came here and hit our take profit. So you have just made a lot of more money from here. So this is how to trade support and resistance. If you are not clear about this, please watch the video over again. You understand more and more. So you can see this, and you can also see if we're going to take